Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome to the technical analysis of the Forex market from the ForexPeaceArmy.com. Today the 6th of December and we will continue to discuss the situation with the euro currency. Well, as usual, we will start from the daily time frame, and during the previous trading session we see that market has shown some continuation to the downside. Well, in general, as we said in the previous week, we could in fact expect some deeper, for instance, A, B, C bottom, D retracement right to the 618, to the daily conference resistance and 38 resistance of the whole swing to the downside 136.05, 136.24. Well, in general that is possible, but currently the price action tells us that the probability not on the side of the bulls, because you can see, first of all, market has hit monthly pivot point. Now it retraced down, it stands below it. This is the bearish sign. Now at the beginning of the current week, market has traded around the weekly pivot point 134.05, and now yesterday it has closed below it and now stands below it. Also take a look how market behaves around this red line, that is the MACD predictor indicator, and shows the trend. You can see that market by this price action during the recent four trading sessions doesn't support the trend shifting. So trend currently stands actually bullish since price action stands above the red line, but take a look at the price action. Lower high, lower high, lower close, lower close. So market doesn't support the bullish trend and continue move to the downside. This could be the start point of the bearish dynamic pressure that usually has the minimum target is taken out of the previous lows at around that area, around 131, 132 area. It's right here. Well, that is also agrees with our medium-term target that we established during the weekend. We said that our medium-term target is around 128, 128.50 is below that lows. Okay, that's very probable that market could continue move to the downside according to the greater ABCD pattern that we have discussed on the weekly time frame. So in general, although we can't exclude this probable retracement, deeper retracement to this conference resistance, current price action, at least on the daily time frame, doesn't tell us that this could happen in the nearest days, because on the daily time frame we do not see any clues, any hints on the potential move to the upside. All that market is showing now has the bearish bias. Okay, let's shift on the 4-hour time frame. On the 4-hour time frame, you can see that during yesterday's retracement, market has continued move to the downside with a solid plunge to the downside, solid candle, and you can see that market now stands in agreement from the target of this ABCD pattern, A, B, C top, 618 extension, 133. Do not see clear the number. I suppose the same as here, 133.71. So that is this confluence, 618 support from that low to that high, 133.71. That is an agreement. So probably market could show some very shallow retracement, because market now doesn't stand at oversold on the daily time frame. So in fact it has no barriers to continue move to the downside. So that's just an intraday chart, and this intraday support levels, so they are not so strong as the high time frame support levels. So if even market will show some retracement, it hardly will be deep. Also you can see that 4-hour time frame trend has turned bearish, and next target by this pattern is 133 area, 100% extension, very close to the low of that thrusting bar. One of the medium-term confirmation of the possible continuation to the downside will be taken out of that low, and market probably will continue move, will fill this rest of that gap and continue move to the downside. That will be the one of the crucial points that markets really continue move to the downside, and probably the next destination will be the taking out of the 130 lows on the daily time frame. But for today's trading session, the nearest target stands right here, and we can't exclude the potential shallow retracement on the hourly chart, maybe due to this confluence support area. Due to this agreement area. Well, on the hourly time frame, what do we see? Hourly trend also stands bearish. Yesterday we said that our stops should be somewhere above the 134.78, since this is the ultimate target that market should not take, because if market will continue to move to the upside, this will tell us that probably market will erase this downward move, solid downward move, and probably market could continue to move higher. But that hasn't happened. Market just hit 134.78 area. That is our crucial level was for the further downward development, and now it has shown really solid move to the downside. What we see here, the first area to watch for where a retracement could reach is 134, since this is the weekly pivot point and the nearest 3-8 resistance from that high to that low. The next area and more solid area is right here, 134.33, 134.39. That is the hourly confluence resistance. So probably, since market has hit just 618 target, it should not take out that area. If it will happen, then probably this ABCD pattern will be erased, since market very probable will continue move to the upside and take out the C point, because this is very rare deep retracement after the just hitting of the 618 target. That's not common. Well, if market will show retracement to that area or as maximum to this confluence resistance, that's normal price action. After that, market should continue move to the downside. If this will not happen, then something is wrong with the short-term bearish perspective. So that is our crucial levels to watch for, and probably from one of that levels you could possess yourself for the potential continuation move to the downside, because this is really strong candles to the downside. That's retracement. Continuation is also solid, so you can see that solid candles to the downside also. Hourly trend is also bearish, as you can see. So that is our current view on the current situation. So probably the downward move has more probability to continue than to reverse now to the upside again. Anyway, we have the crucial area 134.30, 134.40 area to watch for as a potential break-even point for the downward and upward bias. So if market will show retracement even to that area, it should not take it out and should not continue to move to the upside. If this will happen, then probably in the short-term perspective, market could show some greater move to the upside. So if you would like to possess yourself on the short side of the market, you should wait for hitting of that area or maybe one of these levels to enter on the short side of the market. So currently there are no significant patterns and some that could give us really solid confidence with entering on the short side of the market. But in general, we see that on the daily time frame, market is showing something like dynamic bearish dynamic pressures and doesn't support the bullish trend on the daily time frame. 4-hour trend and hourly trend stand bearish. So from that perspective, entering on the short side of the market from that area and placing stop somewhere above the confluence resistance looks reasonable. So probably it makes sense to drop your time frame around that area or one of these levels where you intend to enter on the short side of the market for searching for some clearer patterns on the 15-minute chart or maybe even on the 5-minute chart. Well, anyway, get sufficient confidence before entering in the market and watch over this our break-even level and be sensitive for the potential shifting in the bias on the hourly time frame. Anyway, if market will even show this retracement to that area and then continue move to the downside, this will be absolutely common, although even that retracement is a bit deep for the 618 hitting of just 618 target.